In this video, we'll be taking a look at a few chart analysis to get you prepared for the week ahead. If you love the content as usual, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below. That course is going to help you a lot, right? So this is the gold chart on a 1 hour time frame, and as you can see, we're currently in a bullish trend. This bullish trend has been going on for over 3 months now. And if you've been following us during this time, you would notice we've been taking advantage of the price movement from this bullish move. So we caught it over here at the breakout. We caught another one over here. We caught one over here. We caught one over here. And I also caught another one over here last week, right? So right now, price seems to be creating some sort of head and shoulder. So we have the head here, the right shoulder, and the left shoulder. So ideally, what we expect in this type of structure is a consolidation and a bearish breakout to the downside, which would give you an opportunity to go short. And this is exactly what I'm watching out for, to go short on gold, right? My target obviously is going to be this trend line over here, and that measured movement will be approximately approximately 350 pips, as the case may be. Stop loss is going to be above the consolidation that leads to the breakout, or preferably, if we don't get another good consolidation, the stop loss is likely going to be around these highs. So this is my bearish case scenario for gold. Right now, I don't see any reason why you want to go bullish, because the structure clearly indicates that price is likely going to go lower, right? So something else price could do is maybe give you a move to the downside, like a fake out, go up a little, then continue the move to the upside. So this is totally possible. It's very possible that something like this could happen. But how do we take advantage of price actions like this? So what I do in this case is I'm probably going to fall for the fake out, because sometimes I like to go aggressive. So if I go aggressive, I'm likely going to fall for a fake out. If it's a fake out, that's the reason why you trade risk management. Some traders will tell you this is what you have to do to avoid fake outs and other stuff. Yes, this is good, but I think it's not a healthy way to trade, because then you probably be trading with the hopes of not losing any money. So if you accept the fact that you're going to lose some trade, then it's going to help you work on your money management, strategy, or risk management strategy, right? So if I do get in aggressively, it turns out to be a fake out, then I'm just going to cut my losses, accept my loss, and move on. So for me to go long, I'm going to wait for a good consolidation over here, right? Followed by a good breakout. So this consolidation will give us a structure that looks like this. Okay, so it's going to look like this. So if this happens and gives us a bullish breakout, then I'm going to go long, right? So if I go long over here, my stop loss is going to be underneath the consolidation that leads to the breakout, and first target is going to be here, and I'm going to trail the rest of my positions as we go higher. So this is the first bullish case scenario for gold. Very unlikely, right? So this is a very unlikely situation or unlikely scenario. What's most likely is that we get a move to the downside, right? We get a breakout coming to these price levels, then we get a bounce, then leads us to higher price movements. So this is a much more realistic price case scenario, price action scenario for gold, in which case I'm going to wait for that bounce and then look for an opportunity to go long. Obviously, your stop loss would have to be underneath the bounce. First target obviously is going to be around these highs, and then you trail your positions as we go higher. So this is my second case scenario for gold, which is the most likely bullish case scenario for gold right now. Meanwhile, my first bearish case scenario would be waiting for price to take out this trend line, consolidate a little, and move downwards, where I'm going to exit my trade. So second bearish case scenario, for example, I missed the first one just to be a little bit conservative. I'm going to wait for price to come here, wait for a good consolidation, followed by a bearish breakout. So if this happens, this is going to be my second bearish case scenario, right, for a short position. So I'm going to go in at a break of the trend line. Stop loss is going to be above the consolidation, at least at the breakouts, and take profits. First one obviously is going to be around these lows, or sorry, around this area of value, where I'm going to take out, some very little position of my overall position, right, of my overall entry size. Then second position is going to be over here. Second take profits target is going to be over here, right? Then I'm going to trade the rest as we go lower if I have more positions to hold. So this is actually the structure I'm watching out for on gold right now for a bearish and bullish case scenario. But I'm more inclined to going short when we take out this trend line, and I'm inclined to going long when we take out when we get to this trend line, right? So if we get here, I'm going to look for opportunity to go long in continuation of the trend. That's if we do get a bounce. Otherwise, we're going to watch out for a bearish breakout in continuation of the bearish movement following the breakout from this current head and shoulder structure. So that's it briefly for gold. If you have other ideas, other opinions, please leave your thoughts in the comment section down below. Moving on, I'm talking about Nasdaq. So Nasdaq, this chart looks really undecisive. It's difficult to actually tell what's going to happen in the market, right? Because we're currently trading around the lower bounds of this rising wedge. So this is a rising wedge. I haven't pierced the all-time high, so close to the area of resistance. So this all-time highs on Nasdaq, right? And this is the last price levels we had before we saw a massive decline to the downside. Mind you, this is a 1 hour time frame. So we're currently trading around the support level of the rising wedge, and I think there's a good chance we go lower coming to this area of value. So this is where I'll be looking towards going long or going short. For now, I wouldn't be going short at current price levels because it's so undecisive. We could easily just keep going higher. So we could easily reverse from this current price level like this. We could easily do this and go higher, which is difficult to tell if we're going to do that because this is currently not a significant area of value, right? So that's the reason I'm more inclined to wait, see what price does. If we get into this area of value, then I'm going to look for opportunities to go long. So if we do get a reversal, then my entry is going to be at a breakout of the consolidation. Stop loss is going to be underneath the consolidation, at least to the breakout, and first target obviously is going to be at the resistance level where we trade the rest of our positions as we go higher. So that's my first case scenario for Nasdaq in terms of being bullish, in terms of going long. So second case scenario is going to be a much more bearish case scenario. It requires us to come into this area of value, consolidate around this area of value, and then followed by a massive bearish breakout. If this happens, entry is going to be underneath the breakout. Stop loss is going to be above the consolidation, at least to the breakout. My take profit targets obviously is going to be around these lows. This is what I'm watching out for to trade Nasdaq this coming week. Obviously, I don't know if this is going to play out exactly as I've explained, but this is what I'm watching out for. Bullish case scenario, bearish case scenario, I'm going to wait till it happens for me to take my shots. Right, going to the 4 hours time frame, something to take note of briefly is that we are obviously still in a bullish trend because we can see price creating higher highs and higher lows, right? But it is also important to note that at this area of value, right? So if we come into this area of value, this could be a good level to continue the bullish trend. Alternatively, this area of value, so this one over here, could be a good level to continue the bullish trend. After all, if you take a look at this price movement, you would notice we have higher lows here, right? So we have higher lows over here, which means there's a good chance we even come touch these lows before we continue going higher. So if you don't want to take this one, you could do this. So these are just experimental price levels, and it's totally fine to do that just to find where to set your boundaries or your support levels in anticipation of a price rebound, because I don't think this trend is coming to an end anytime soon, right? So all we have to do is look for those price levels where price is likely going to see their reversals, right? So that is the reason why I think if we don't bounce off this area, bounce off of this area of value, there's a good chance we come into these price levels before we go continue the trend. And in doing so, the break of this area of value here, this green zone, would give us a good opportunity to go short, which is what I explained earlier with my bullish and bearish case scenario. So that's it briefly for Nasdaq. Moving on, we're talking about US500. US500, similar structure to what we have on Nasdaq, but a bit cleaner, right? Because the price levels are well detailed. You can see we had price consolidating within this range, and last week I talked about the possibility of price taking out the area of support, which it did over here. You can see we bounced off a little, consolidated a little, and it gave way for this massive move to the downside. If you followed our weekend analysis last week, you should have caught this trade opportunity. I didn't trade US500 last week, so I missed this trade opportunity, but I'm sure not going to miss the next one, right? So two things are likely going to happen. Right now, I'm waiting for price to come into this area of value, see what it does before I decide to either go short or go long. So I'm going to go long if we come into this area of value and we consolidate around these price levels, followed by a good breakout to the upside, right? If this happens, my entry is going to be at a break of the consolidation. Stop loss is going to be underneath the consolidation that leads to the breakouts. I know I didn't draw my lines properly, but just to make this clearer, right? So I'm talking about something like this, a consolidation like this, right? So I'm going to get rid of this one, excuse me. Get rid of this. So more or less something like this, right? So my entry is going to be at a break of that consolidation. Stop loss is going to be underneath consolidation, and first take profit target is going to be around this area of value. Second one is going to be around this resistance level. So this is how I'm going to go bullish on US500 if we do get a reversal from this area of value. So if we don't, then here comes my bearish case scenario, right? Mind you, you are bound to trade fake outs every now and then. It's just part of the market. You shouldn't be scared about it. Just accept it for what it is and trade with good risk management. That's what's going to save you, not trying to avoid trading fake outs, right? So bearish case scenario is waiting for price coming to this area of value, consolidate a little, right? Like what we'll be expecting on Nasdaq, then give us a good bearish breakout. So if this happens, stop loss is going to be underneath the consolidation leads to the breakout. Then my stop loss is going to be above the consolidation leads to the breakout, and first take profit target obviously is going to be around these lows, and second one is going to be around this area of value over here, right? So this area of support is going to be my next target, which I discussed last week. So I'm going to wait for price to come into this area of value, then I'm going to go short. So I'm going to go a little aggressive on this one if we come into this area of value. But before we get here, we have to get through this price level, which is what I just explained. So my bullish and bearish case scenario for US500. So right now, I'm just going to be patient, see what the market does, and see how price reacts to this area of value. That's it briefly for US500. Lastly, we're talking about crude oil. So crude oil chart looks good and confusing at the same time, right? Because of the zigzag price movement we can see over here, right? So the thing is, it looks like we're trading within a range, but if you take a broader look at the market, it also looks like we're trading, we're in a downtrend, right? So you can see price trading lower highs, lower lows until we had this move over here, right? So right now I'm going to be leaning more towards the price action to decide what I'm going to be doing in this market. You can see what we have currently coincides with what we had in the past. So over here we had this good consolidation, we had a good breakout from this trend line, and we had a retest to touch this trend line before we had a massive gap last week. So I explained and I talked about the possibility of going short. So sorry, this happened last 2 weeks, I think. Yeah, last week Monday. Yeah, that's what led to this gap, right? So I was hoping I'll be able to take a short position over here, aiming for this area of support, but surprisingly the market opened with a huge gap. It didn't give us the opportunity to go in, and here we are. So the only reason why I think I'm skeptical about going short on this trade right now is because gaps are most likely going to get filled, and there's one over here. This gap over here didn't get filled by this candle, so there's always that risk of price reversing to the upside to fill that gap, you know, before going down. But I'm not saying this exactly what's going to happen, but it's likely going to happen. So when you're going to be taking this trade, you should consider where your area of stop loss is going to be, right? So if I'm taking this trade, I want to place my stop loss around these highs, but the current price levels to these highs is currently too high. So what we do is we wait for price to maybe come down, give us a higher low, consolidate a little, then we look for our opportunity to go short. So then we get a structure like this, right? So I think this is the most likely case scenario. So this was most likely going to happen for us to get a good opportunity to jump into a sell trade on crude oil. So crude oil right now, while it seems enticing to jump in on a sell trade, I wouldn't do that. I'll be much more patient with this, see what the market does before I consider going short. So even if we just keep going down now, I am going to miss that trade opportunity because there's no way I'm jumping into this trade right now. Not until at least we get another pullback to the upside to validate my thesis of, you know, this gap closing, or at least to close the gap between my entry and my stop loss. I don't want to take a trade here, right? I don't want to take a trade at these current price levels and then set my stop loss around these highs, because this highs simply underneath this gap, and I do think we're likely going to fit this gap. So even if we don't fit the gap, my stop loss is likely going to be around these highs, which is a safer zone for me. So there's no way I'm going to the trade here and set my stop loss here. So that's the reason why my strategy dictates that I wait for a pullback, a reversal to the upside. Then I'm going to look for better opportunity to go short, maybe around this price level. So it just depends on how the structure turns out to be formed at the end of the day, right? So that's it briefly for crude oil. I am not looking forward to going long because I don't see any reason why I want to go long right now. There's nothing to indicate that we're going long because the structure is clearly bearish or ranging, right? So I'm going to wait for that bearish opportunity and I'm going to go in as my strategy continues to play out. So that's it for this week's analysis, guys. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. Lastly, if you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I teach you everything from scratch to bottom, right? So that's it for me, guys. See you next week.